Welcome to Brookhaven National Laboratory. Today you will hear about BSA's retirement program. After viewing this video, a member of the Benefits Office can assist you in making your retirement program elections. Now let's continue. BSA has two retirement plans. The BSA Retirement Plan, which is also referred to as the 401A Plan, and the BSA 401K Plan. Let's first discuss the 401A plan. The 401A plan provides participants with income at retirement and is provided at no cost to the participant. Once you are eligible to participate in the plan, BSA contributes an amount equal to a percentage of your base salary. The percentage is 10% if you are a member of the IBEW union and 9% for all other employees. Base salary for the purpose of this plan excludes overtime pay, shift differential, severance pay, accrued vacation pay at termination of employment, and any other forms of compensation. Employees may not contribute to this plan. BSA has another plan, the 401K plan, to which employees can make contributions. We'll discuss that plan in a little while. Now let's talk about eligibility to participate in the 401A plan. Employees may participate in the 401A plan as of the earlier of the following two dates: the date you attain age 21 and complete 1 year of service, or the date you attain age 30 and complete 6 months of continuous service. If you are a part-time or temporary employee, different rules apply, and you should contact the Benefits Office for details. Service for the purpose of eligibility in this plan includes continuous service with Associated Universities, Battelle Memorial Institute, the Research Foundation of the State University of New York, and the State University of New York at Stony Brook. The service must be immediately prior to a transfer of employment to BSA. If you previously terminated employment with BSA and have been reemployed, special rules apply, and you should contact the Benefits Office for details. There are some individuals who are not eligible to participate in this plan. They include leased employees, any person with a guest or visitor appointment, any person whose terms of employment are governed by a collective bargaining agreement unless such agreement provides for eligibility, independent contractors or individuals who perform services pursuant to a written agreement with a third party, and research associates, research fellows, or student assistants hired on or after January 1st, 1999. Please note that additional exclusions may apply. Now let's discuss how to enroll in this plan. You will receive information from the Benefits Office, and you will automatically be enrolled when you first become eligible to participate. Plan contributions will be invested in the default investment option. Currently, the TIAA-CREF Lifecycle Fund is the default investment option, so your investments will be defaulted into the TIAA-CREF Lifecycle Fund based on your date of birth. Your estate will be designated as your beneficiary. You will receive information on the Lifecycle Fund from TIAA-CREF. You may change these designations after your account has been set up by TIAA-CREF. You should contact the Benefits Office for additional information. Here's some additional information on the 401A plan. First, if you invest in the TIAA Traditional Annuity, those investments are locked into the TIAA Traditional Annuity for 10 years. Next, this plan does not accept rollovers from any other plan. Let's also discuss vesting. Vesting means being granted a right to the money in your account. Under this plan, you become 100% vested over a 5-year period based on your service from your date of hire. You will be 25% vested after 2 years of service, 50% vested after 3 years of service, 75% vested after 4 years of service, and 100% vested after 5 years of service. If you leave BSA before completing 2 years of service, you forfeit all money in your account in this plan. Now let's discuss the 401k plan. The 401k plan is a voluntary program that provides participants with the opportunity to supplement income at retirement. Contributions to the 401k plan are withheld from your salary before income taxes are calculated. This saves you money on your taxes in the year that you make the contribution. So, who is eligible to participate in this plan? Full-time employees may participate in the 401k plan as of their date of hire. Employees who work on a part-time, temporary, or irregular basis may participate in the plan following completion of 1,000 hours of service. You should contact the benefits office for more information. There are some individuals who are not eligible to participate in this plan. They include leased employees, any person with a guest or visitor appointment, any person whose terms of employment are governed by a collective bargaining agreement unless such agreement provides for eligibility, independent contractors, or individuals who perform services pursuant to a written agreement with a third party. Please note that additional exclusions may apply. Let's discuss contributions to the plan. Participants in this plan may contribute up to 25% of base salary through regular, pre-tax payroll deductions. Base salary for the purpose of this plan includes overtime, shift differential, and accrued vacation pay at termination of employment. The IRS limits your annual contribution to this plan to $17,500 for 2014. If you are at least age 50 during the calendar year, you may contribute an additional $5,500 per year under the catch-up provision. This is also subject to IRS limits. Now let's discuss how to enroll in this plan. First, you must contact the benefits office to enroll in this plan. To enroll, you will need to select the funds in which you want to invest your contributions. You will also need to identify at least one primary beneficiary. If you are married and do not indicate your spouse as a beneficiary for at least 50%, you will need your spouse's notarized authorization. You should also designate a contingent beneficiary. The contingent beneficiary designation only applies if the primary beneficiary is deceased when you die. You will need the date of birth for each beneficiary that you designate, but you do not need their Social Security numbers. You may change your beneficiary designations at any time. Here's some additional information on the 401k plan. First, if you invest in the TIAA traditional annuity, unlike the 401a plan, such investments in the 401k plan are not locked into the TIAA traditional annuity for 10 years. They do, however, have a lower guaranteed rate of return than under the 401a plan. Next, this plan does accept rollovers from other qualified plans. You should contact the benefits office if you want more information on rollovers. In addition, you may recall that we previously discussed vesting, which is when you are granted a right to the money in your account. Under this plan, your account is immediately 100% vested. Now let's discuss some general information that applies to both the 401a and 401k plans. You have numerous investment funds available. A list of funds, including rates of return and comparative risk level, is available on the Benefits Office website. When you select the funds in which you want to invest, consider diversifying your portfolio, and consider any other investments you may have outside of these plans. Diversification means reducing risk by investing in a variety of asset categories. Allocating your investments between different asset categories, in theory, provides some protection against loss when one type of investment is underperforming. Since different investments often move in opposite directions, investing in a range of asset categories reduces the risk that all assets will be decreasing in value at the same time. If you have questions or need assistance in selecting your investments, licensed financial counselors from TIAA-CREF are available to assist you. There is no charge to you for these on-site financial planning services. They are free to you as a plan participant. Once you have made your investment elections, you may change them on a monthly basis, but we suggest you contact the investment company to determine if any frequent fund transfer fees will apply. Let's continue. If you have a TIAA-CREF account with a prior employer, you will receive a new account number to designate contributions at BSA. You cannot use the prior account number for contributions into the BSA plans. Next, once you are a participant, you will receive quarterly statements from TIAA-CREF. You should review your TIAA-CREF statements for accuracy. Review both the amounts contributed and the fund allocations. If you have any questions, you should contact TIAA-CREF directly. For individualized financial counseling at no cost to you, you may contact TIAA-CREF directly. TIAA-CREF will arrange an on-site meeting with you. For additional assistance regarding the retirement plans, you may contact the Benefits Office at extension 7516, or you may contact TIAA-CREF. This information should be helpful in getting you started with your enrollment in the BSA Retirement Program. A representative from the Benefits Office will gladly assist you with your enrollment.